Hello all, welcome back to another episode of the Investors Corner. New year, new investment strategies, new stuff going on. So we'll be talking about that today and recent investment news that's come out, bringing you up to date on things. But chaps, how are we?
Very well, thank you.
All good?
Yeah.
Excited
all
for the
good.
new year?
Love the new year.
Love it. Love it.
Here for it.
Pretty pumped for it. Started the new year with a fast.
Ian started eating,
Yeah,
so
you've
we're all good again.
Done about a week. What
No
was it?
nonsense.
5-day fast.
No, I did 90 hours in the end.
Oh,
First 90
bottled
hours.
it.
Yeah. I'd love to say that I bottled it, but there's a bit of a medical tap out, if I'm honest. So,
how are you feeling after it?
I feel unbelievable, actually. Yeah, the day after it, I was like, I had a big steak that evening and fully recharged, mind was focused, pumped looking at investments, looking at how the market might sit. I've got some data for people to kind of a little bit of a recap on what happened last year, so you can get some actuals on property averages. You know, it's always, I think it's always good to see what your portfolio is worth at the start of the year and then what you want to target yourself for the end of the year. That's something that I set up as one of my goals this year, is I want to try and grow my investment equity by 20% this year. So relatively ambitious, but that can also include putting cash into it. So that's a big target for me this year with kind of personal investments and things like that. So yeah, been playing around, had a little dabble, couple £100 in crypto.
Oh, he's in.
I know.
He's in.
Little Boxing Day treat. I thought, right, I'm going to throw that in there and see what goes on, so I can share my wins or losses live if you want on this episode.
Good.
And yeah, kind of looked at the market for 2024, bit of live data on sales transactions, if you're interested. This is for England. Sorry if you're in Scotland or Wales, but I just did it for England. So sales agreed in 2024 versus 23, you know, is a good shift of, you can look at the market and say average prices, but that's dictated by supply and demand. What actually happened in terms of transactions is probably a good statistic measure. So there was 776,000 in 2023. It rose by 18.5% to 920,000 in 2024.
Crazy.
That's just England statistics in terms of sales agreed, buyers found.
Remember those articles saying that there'll be a 30% dip or something like that in the housing stock? Rubbish.
Yeah. Listings, I don't have the data offhand, but it was just shy of 1.5 million new properties came to the market in England in 2024. About 250,000 more than 2023. So more people moving, more people selling. What did prices do? You know, you can look at Zoopla, Rightmove, Halifax, all of them, and they'll all give you slightly different metrics. But in terms of across the whole of England, live information, exactly as it happens. I've obviously got a bit of software that we pay for that plugs in, that gives us the real-time stuff. So the average for England went from 379k to 384k. So it's an actual rise of 1.3%. So if you've got an average property, which there is no such thing, so you won't, your property grew by 1.3%.
Which is what we sort of said at the start of last year, wasn't it? That it would hover around sort of 1.5%, sort of 2% and stuff. So yeah, it's great.
You saying we were right, Andy?
I am, yeah. Well done.
Claiming it.
12 months later.
We seem to do pretty good on predictions. I remember
funny when you got three people in the room who know what they're doing.
Should we talk about the ones?
Amazing. Yeah, name and shame.
So yeah, that's my data. Over to you, Mike.
So I looked at news coming out over the last 24, 48 hours. The proper kickoff to this year has been Monday. Obviously, we had Thursday, Friday, where some people came back to the office and some people hid under duvets, but we're in it now. And this morning, two big investment houses have come out and said Foxtons, who are obviously London's biggest estate agent, give or take, depending on who you talk to. They're apparently undervalued by about 50% on the stock market. They put a trading sort of predicted price or a value price on Foxtons about 50% higher than it actually is trading for, which, based on the numbers that you've just given me, correlate to say that they've obviously seen a big uptick in transactions in 2024, and those people who are looking at Foxtons are predicting that to to maintain in 2025 as well, because generally speaking, estate agents don't fare too well on the stock markets because they are so volatile in what they do. But it's a very, very bold move to go out and say Foxtons is severely undervalued as a trading stock on the basis that they've got the highest pipeline they've had since Brexit vote. Everything's moving in the right direction, property's moving in the right direction, transactions are moving in the right direction, and the high end of London will be supported by US buyers this year. They've got out and named, like, this is the country where people are going to be leaving to buy property in London. So that's my kind of flag for the year, is if stock markets are looking at estate agents as undervalued, then it means their thoughts that the property market will have a good year this year from the point of view of transaction volumes. Weirdly, people think that house prices drive estate agents. They don't really. It's transaction numbers. If house prices go up 5% or down 5%, it doesn't really matter to an estate agent. It's how many houses are sold. So that means they must be thinking that that's going to increase again by another healthy percentage.
Do you think that will change after the new stamp duty rules come into play, or do you just think that it's just going to continue throughout the whole year?
I think it will boost. Normally in quarter one, transactions are quite subdued because you're looking at what happened in October, November, December, which is a slowdown in sales. But we saw an acceleration in sales at that point. So the quarter one will be pushed up in a kind of unnatural way this year. And then the rest of the year, it does remain to be seen a little bit. We'll see.
My gut is, we're talking $2,500 more in tax, basically. So in the grand spectrum of things, it's
matters very little in London.
It might get you a one-seater armchair these days from Next. So
yeah,
in the home moving process, it's not crazy.
Doing it anyway.
It's significant, but I think what we might see is a base rate change at that same time to kind of soften the blow a little bit.
Yeah.
So I think that will be the...
Yeah, you might pay £2,500 up front, but then save that over 5 years on your first mortgage.
Yeah, if not more. It's interesting what they say about the US. It's quite interesting. Interested to see kind of where the out of the country investment comes from, and it's interesting what they're saying in the US because the prime market took a bit of a kick in London last year, but as obviously Trump has got into power and the dollar has grown a little bit stronger again, and the gap between the kind of the pound and the dollar has continued to grow.
Is that why Trump's panning the UK? No, sorry, Musk is absolutely telling the world that the UK is in some sort of civil war because he's now part of the government, and he's just stop spending money in the UK.
If you need some property investment advice in the southwest of England, southeast of England,
I don't know anything about the south.
Well,
we're going.
We cover both, and we're happy to help it. I'm happy to pluck up Swindon. I've got a guy. But yeah, it may be. But it's interesting because I think this is something that I've been reading a book on last year, and kind of if you look at how the dollar works and you think about the dollar versus pound, if you've got a London property that was worth £1 million 10 years ago, and let's say 10 years ago it's 1 for 2 on the dollar, and then the property hasn't moved up in price, well, it's still worth £1 million to us, but to the person from a dollar point of view, it's half the price.
Made a good percentage on it.
If you had your money in America and then you come back, even if the market hasn't moved on because of how the currency rate has gone, it's half the price to buy in England than what it was when the dollar was 1 for 2, effectively, in sort of round numbers. Don't go crazy in the comments and say my maths is wrong, because it's total fag packet stuff there. But along those lines, basically, it's quite interesting because with your article, I found an article from moneyweek.com or .co.uk, whichever one it is, and it actually says that the US has got 26% of their wealth invested in property, 10% in cash, whereas the UK is 50% invested in property, 15% in cash. Comparison to somewhere like Japan, which is 35% invested of their wealth in property, and 37 in property and 35 in cash. So Japan is very cash rich, very balanced.
Is that the people of Japan, or
yes,
yeah,
the public, the population. Germany 57% invested in property and 16% in cash.
It's interesting that because everyone bangs on about Europeans renting, don't they? And they're not being a really, they don't care about owning property. Apparently they do.
Yeah.
So
France is 52. So Germany and France have more of their overall wealth in property as a percentage than we do. I don't know.
There you go.
Potentially because the prices in England are very high. I don't know.
Yep.
Well,
it's limited space on land. America's a funny place, isn't it? People think of the US as like New York, where buying a Manhattan apartment is like buying this room is probably a couple of $1 million. It's a bit like Hong Kong, but there's huge swathes of America where you can buy a good few square miles for pocket change, isn't there? So it's a strange place where there's such a mixed, diverse population.
Well, we're talking about cash, and then I'm exhausted on my my remarkable data. But right, so you best help better. But just because it flows nicely, unplanned. There was an article by someone called Eleanor Harvey actually that came out on the 7th of January. It was quite an interesting one because she's highlighting cash to be king in 2025, and then she's got the data for the discount that a cash buyer gets across different regions of the UK in 2024, with the kind of message being speed equals deals for property investors in 2025, which you can't argue with, and backed up by the fact that the UK population kind of loves security. We're quite a safe pair of hands, and that's our kind of perspective on cash. So in the Northeast, if you're a cash buyer, last year, 12.4% discount. In Yorkshire, 7.7% discount. In the West Midlands, 7.4% discount. In the South East, 7.2% discount. In the East Midlands, 6.4% discount. In Wales, 5%. And in the South West, 3.8% discount. So where we are, 7.2% discount compared to an average buyer if you're a cash buyer. It's quite chunky.
Yeah.
But it was quite an interesting article, actually, because I was like, okay, you don't really think that way, as us as agents, we don't really look at it and go, well, you're a cash buyer, therefore you can get a better price, because we're just trying to set it up in the best way for our client. But the perspective of the public is that they're happy to take in the Southeast, quite an educated place.
Yeah, I think sometimes a cash buyer is probably a more educated buyer and can put an offer forward in a better way. Mm-hmm. Because you're more experienced as a buyer, you can leverage your position rather than just buy the house. When I moved 18 months ago, I wasn't a cash buyer, but I was just porting a small mortgage rather than going through a huge amount of rigmarole. And I feel like I leveraged a really good deal on what I was buying because I could articulate why I was the best buyer for that seller.
Yeah.
And I paid less than someone else who had offered was willing to pay, but I made them know that I was the better buyer with facts. I could tell them exactly why I was a better buyer for them, even without the cash. So I kind of brought myself into that. Well, I've got a small mortgage; it would just be ported across. I kind of brought myself into that cash buyer territory by saying, there's going to be no survey, no need. There's going to be very few checks on this because I know what I'm doing.
Speeds up the process, doesn't it?
Exactly. Speed kills the competition. So I could say I can move in 4 to 6 weeks and you need to be out quickly.
Yeah.
Whereas I know that
the advice though to lend to the property investors that are listening, first time property investors that are listening, because we know how to dress up an offer.
Oh God, yeah.
What we do. So we're like, look, I've got my solicitors in place. I'm using X. My mortgage offer is through this lender with this broker.
Yeah.
This is the price I'm prepared to pay. These are the timescales. This is the security you get. We know how to dress that up. So for a property investor that's looking to buy a property in 2025, it's worth mentioning because it's great advice, because through the estate agent hears the offer, not the seller. That's the key thing for an investor to think about, is you're not talking directly to the seller, you're talking to the agent. So whether you like the estate agent or not, you need to sell yourself to the agent or the translation from agent to seller.
Well, I bought through an agent, and I gave the agent the ammunition to pass on to make it really easy. A full page document on why I was the best buyer, not any bullshit. It was, this is the facts of why this transaction will go through. You've got guarantees that this isn't going to fall through. These are the facts about my buyer. This is the position where we're at. So they didn't have to do any digging. They didn't have to do any chain checking or anything like that. I'm sure they did do their diligence anyway, but I gave them all of the ammunition they needed just to go and tie that deal up, rather than just giving them a figure. If you just give them the figure, that figure is a yes, no, or will they pay 10 grand more? Kind of let's meet in the middle bullshit negotiation, which normally happens. It's like, well, the price is 900, I'll offer 850. Can we meet in the middle at 875? Deal done. No, that's not how you do a deal. Everybody knows that if they're in any line of business, that if you put in 850 forward, tell them why you're putting 850 forward and back it up, and then tell them why it's a good idea for them to take that 850. Just pulling numbers out of the air. Rather than just putting 850 forward blind, because all they're doing is going, they're just seeing if they can get a deal out of me.
Yeah, it's more about creating a profile for yourself, isn't it? And
absolutely.
filling in all of the questions and all of the blanks. You see it on systems out there where it asks you to create a profile. The more you fill it in, the better service that you get and the more benefits that you get.
Yep.
So it's exactly the same here, is that give all of the information, pass it on, and then if I looked at that, what you gave me, I'd be like,
done your job.
Shit, I know everything about it. I know everything about him. I've done,
you just almost click control forward, as far as the offer's concerned. Well, that's the job done for me. They're a great buyer. I want to work with these people as an agent, and the seller's going to want the same thing too. And the best first-time buyers, generally, the offers come through from their mortgage broker. The best first-time buyers, because the mortgage broker knows what they're doing, and is giving advice on it. But that's for me, for buy, whether you're buying for investment or buying for yourself, is don't just chuck an offer in. Do some work on it.
I think a lot of property investors make this as a mistake, though. This what we're talking about, this communication channel. I think a lot of investors are talking to estate agents with too much arrogance and too much information left off the table. And that's my experience, over 22 years of being an estate agent, in dealing with people that are looking to buy to lets. They're often too harsh on their offer without an informational reason to why. They're too reluctant to suggest that there's potentially movement on it, and they will instantly be dismissed as a buyer in the negotiation process because they're not prepared to give a little. They think because they're a cash buyer or they're an investment buyer that they're the only people that could get that property. And then when you turn around and say no to them, instantly they jump up, but sometimes it's too late. And I think it's great advice for people, because if you are looking to buy an investment out there, you need to know, we talk about power teams, but you do need to know how to talk to estate agents. And you do need to know how to get an agent on your side. And the information that an estate agent wants is information. That's the most important.
And we had Pete on a couple of weeks ago, and he discussed a property that he'd bought in Bracknell, just for a number that just blew my head off. But it was because the seller wanted to sell for him, and he could work to their timescales, doing what they wanted to do, and he'd interpreted that, and that's why it worked for him. I don't know if anybody else in the local property market could have got that deal done at that price other than him, because he's done the best job.
It's exactly that. I mean, the first house I bought with my wife, which we've sold and moved from now, but the first house we bought, it was launched on Boxing Day launch. We saw it.
Let's not go into that.
Different conversation. But it was launched on Boxing Day. We saw it, managed to get booked in. I think we went and viewed it on the 29th of December, something like that. Quickly realised through the estate agent that there was a bit of a bidding war on it. Market was popping. This is, 9 years ago. Market was popping. Got the insight that there was 5 other offers over asking price at that point. And I was like, brilliant. So I'd only seen it on my own at that point, I think, because my wife was working. So I booked an appointment to revisit, meeting directly with the seller with my wife as the excuse. So she needed to see it before we made an offer. What I was actually doing is I wanted to meet with the seller myself, sit them on the sofa and do exactly what you said.
Yeah.
Give them the sales pitch of us as buyers, which is what we did. My wife had already, like a lot of wives do, had already bought the house in her head on the right move advert. If the deal was done in her mind, she just needed to walk around.
Yeah.
But I sat the sellers down on the sofa. Unfortunately, I was in a position there where I'd sold my house and we were actually in an investment property, so we were sort of no chain buyers. The sellers were a little bit older, gave them the security, explained I was an estate agent, explained all of the bits that I could do as a buyer and put my offer forward. It wasn't the highest offer on the table in the eyes of the estate agent, but our offer was agreed because I'd had the physical, emotional connection with the seller that the other buyers hadn't had, and I'd given them security that they needed, and we did exactly what we said we would do. In terms of the terms, the timescales, everything. We didn't mess around, and we got it through. And I got that house at probably 7, 8, maybe 10 grand less than another buyer because they were secure.
Mm-hmm.
Yeah,
absolutely secure, even to the point that I'd been shown around the garage by the owner. And he said, what do you want me to do with all the wood that's in the roof of the garage? Because he was so proud of how much he connected. I was like, I'd love to have that wood. Love that wood. So we'd built this like bond. I didn't use the wood, sorry about that. But it was all part of the process of kind of showing that I was the right person for the home. And that's a great advice tip for investors that are looking to buy this year, I think.
Yeah, like that. Right, should we go away from property for a bit?
Come on in. Talk to me about
crypto. A lot of news out there, a lot of positive news. Sort of seems to be outweighing the negative news on crypto at the moment.
Is this a Trump thing? Has Trump really kicked it off in a catalyst?
I think so, because Trump was very pro crypto, right? He came out and said that he wants America to be the crypto hub of the world. So he's looking at deregulating certain aspects of crypto. There's a few court cases out there at the moment against cryptocurrency companies that are looking to be dropped, and the person that filed all of those proceedings against the company has come out and said that he's now stepping down. So again, that frees that up. But he's definitely had a major impact on it. We saw just before Christmas it go down slightly. But it always does sort of around the New Year time. But then we've come into the new year, and there's certain cryptocurrencies that have just skyrocketed. We look at Bitcoin at the time of recording now. That's gone above 100k again. A couple of weeks ago, it was around 92, 93, so that's jumped up. Look at other ones like XRP. Over the last year, that's jumped up by 300%. In the last month, it's gone up by 30%. And there's others as well. You're even seeing these meme coins come through where they've jumped up by 60 or 70%. I looked at cryptocurrency exchange. There was 3 on there. One called Peanut the Squirrel. Cool. One called Fwog, and the other one called Doland Tremp. They're just meme coins. You've got a community behind them. As soon as they launch on the crypto exchange, they go up slightly, but then you look at the trajectory and they go down by about 90%. So it's just a rug pull, sort of meme coin, really. But
the girl from the Hawk Tour meme launched a coin. Did you see it?
Screwed everyone over.
Absolutely pulled everyone's pants down, then disappeared.
And that's the thing
we're ever seeing her again.
That's the thing with meme coins is that they have no value. There is no value to them whatsoever.
Explain what a meme coin is.
It's just something. It's just something that's been created that's got a great title, that's got a big community behind them, and it's just a funny coin where it gets launched to see how many people buy into it, basically. So it's like Elon Musk. If you look, he had on his X handle tag something Maximus or something like that, and Gladiator 2 came out, and then suddenly that has popped off that everyone wants to invest in it just because Trump's got it. Sorry, not Trump.
We keep
Musk. Musk has got it on his X, and like I said, they have no value. It's just a community coin that you can't really do anything with. Yeah, so it doesn't really mean anything. So, you've got to look at cryptocurrency in the way that, does it have a value by serving a real world sort of problem? And that's the way that I look at it. That's why people say Bitcoin is just a digital gold. Doesn't solve anything. You can make payments through it, but the payments are quite slow. And they take a while to process from going peer-to-peer or country to country. So, but that was the original cryptocurrency, and that's why people still buy into it.
What I learned, there's a finite amount of Bitcoin. So once it's all mined as such, that's as much as there's ever going to be.
Yeah.
Whereas pretty much everything else, there is no line. So just like currency, you can just keep blagging it and making more and more, and therefore devaluing that asset. We've got James Dewar coming on in a couple of weeks, and I'm really excited because he's going to explain that properly to why Bitcoin has a legitimate value because it's a finite resource compared to
you have to see them as totally different things.
Dogcoin or whatever it's called.
Yeah,
just because it's got a picture of a dog on it, but you don't actually have it, so you don't actually have a picture of a dog on it. You don't have one.
Right. All of the crypto has got a limited supply to it. The only thing with Bitcoin is that they have halving events.
Yeah.
So where they get literally rid of some of the Bitcoin and the limited supply always comes down and what's left over. So yeah, it's always that prized asset that there is only a certain amount of Bitcoins, and you know they're looking at purchasing things in Bitcoin. You know, talking about purchasing real estate in Bitcoin, other things as well. So if it goes that way, and you've got that asset that you can use, then of course it's going to have a high demand and it's going to have a high value. You know, another one that I look at, and there's big news on this, and most of the articles are around this at the moment, is XRP. Another word, Ripple, it's called as well. So with XRP,
high quality chocolate bar Ripple, by the way, underrated.
Ripple, do you remember Ripples?
Yeah.
God, are they still going?
Don't know. Gonna get on and have a look in a co-op. Yeah. In a co-op, I'll get some later.
But yeah, XRP allows financial institutions to process thousands and thousands and thousands of payments at any one time for 0.5%. So if you think that if they adopt this type of technology and software and start using this, imagine the cost saving that's going to be created for them. They're going to be making billions of pounds in extra revenue because they're not forking out major costs to have these transactions. Yeah. So something like that, and that's the reason why there's big news, is because apparently a lot of financial institutions out there in America are currently beta testing this platform. And if everything goes well and it gets rolled out, it's going to go crazy. But it just shows you something like that can solve a real world problem.
Yep.
And others can't. So if you invest it correctly and concentrate on the things that actually solve things, then you'll do fine in crypto, because it's always going to explode. You know, you hear people out there at the moment saying crypto's a scam, it's a mugs game and all of that. Those are the people that just don't understand it, or might have put 500 quid in it and lost it all because they put it on a meme coin that lost all of its value and just it was a rug pull. So yeah, I mean, cryptocurrency, articles out there, the big trend at the moment, especially coming into the new year, and people finding ways of how to maximize their investment money, are looking at crypto. All right, it's volatile, but if you research it correctly, it's not, because on crypto exchanges you can set when to cash out. So if it hits $4, I'm cashing out. Automatically does it. You don't have to stay up till 1 o'clock, 2 o'clock, 3 o'clock in the morning, because crypto is 24/7. It's not like the stock market where it closes. So you can set that. You can set when you deposit money, when it hits a certain level. So everything is automated. You can just set it up.
Interesting is I threw 300 quid in between Christmas and New Year just for a bit of a game, just for a bit of fun, just to try and get my head around it. I like to kind of just understand things. So I was like, okay, I'll throw 300 quid in. But
it's like your Christmas money from Grandma.
What I didn't expect was the quiz that I'd have to take. You have to pass a test to actually be allowed to invest it. It's quite detailed questions as well.
What's in the quiz?
But it's just, do you understand this? Do you know this?
Okay.
Yeah,
what's regulated? What's not regulated? All of that
what
sort of
can
stuff.
happen if you do X or Y? You have to get it right. You have to get a certain
otherwise
you can't invest.
To be on the platform.
Yeah, I was like, you know what? That's quite cool. I like the idea that, you know, you have to have at least a good understanding. Some of the questions I didn't know the answer to, so I had to go and do a bit of research. I felt more educated by doing the test.
Yeah,
I did have a bit more confidence. I was like, "That's
don't have to do that on Sky Bet, do you?
Straight in, user ID, password, done.
yeah." Liverpool win, which didn't happen.
Yeah, well, that's exactly my point. Yeah, there we go.
Yeah, interesting. No, it would be good to get the chap on to really kind of quiz him on a little bit more expertise on that, because we're really looking for someone to come in and do that. But I think to summarise what we've spoken around, we've gone from property to cash to crypto. The answer really in the way that I'm looking at things is to spread those baskets of cash, you know, and crypto is one of those areas that if you've got 50 grand's worth of money invested, if you remove your own property from the equation, but if you've got 50 grand's worth of money invested, what is the ideal split in terms of percentages?
Yeah, what do you need?
It depends on their age a little bit and how much they want to kind of set themselves up aggressive or secure. But you might have 20 grand sat in a relatively high interest savings account as a bit of security. You might have 5 grand, 10% of it sat in crypto. You might have it 10 grand in stocks and shares and X, Y, and Z. You kind of look at that way. And I think with crypto, you could potentially have 5 grand in Bitcoin and 5 grand in crypto, because they are two very different things. But that's a nice way to kind of do that for 2025 and use it as an education piece to see kind of what happens, because crypto isn't going anywhere, let's be honest.
It's not. I mean, you've got new infrastructures coming in, a new financial system coming in. At some point, it's going to go down the crypto route, whether that be in 3 years, 5 years, 10 years, or whatever. It's not going anywhere. Well, the main coins or cryptocurrency isn't going anywhere. So people need to adopt it, need to look into it, need to be more, positive about it, especially investors, because, like you said, if you've got the spare cash, I believe that if you put it into crypto and you understand what you're doing and you set everything up correctly and invest in the right things, there is no better investment than crypto to get returns from.
Well, do you remember about a year ago, I said I was going to learn a little bit around the stock market?
Yeah.
I was going to throw a bit of cash into that. And then I kind of did a little bit of education. I didn't do it on funds. That'll be my next thing to kind of play with. But I did individuals where I kind of got the results of the all-time results of the holdings that I've got effectively. So I threw a little bit of money into Lloyd's. That went down by 1.39%.
Over a year?
It's about 18 months.
Okay.
About 18 months, something like that. It might be about 20 months. Put some money in Uber. That went up by 0.5%. Put some money in Deliveroo. Let me just check I'm on the right metrics here, that this is the all-time. Yeah, total. That went up by, Deliveroo went up by 6.19%. Put some money into GE Aerospace. That's for a different conversation. That one up 23.2%. Put some money into Amazon. That's gone up by 51%. Put some money into Apple. That's gone up by 32%. Put the bulk of my money into Meta. That's gone up by 154%. So, in terms of where you can put cash, if you'd have put money into Meta, you'd have put 150% on your investment, basically, which was the best result for me. But that was kind of my returns on those, basically. And I learned a lot, over that kind of nearly 2-year window of what was going on with bits and a little bit more education. And, I was only putting a little bit of cash in a month. So it wasn't like it was something that was like betting on Liverpool, betting on Nottingham Forest or Chelsea in my case, which I'd never do, because it's a lose-lose if we lose. So, that was just quite interesting results as well. So
that's about, you educated yourself on that, didn't you? And you have to educate yourself on these things, stock, shares, crypto, and whatever else, because if you don't, it could be a slippery slope into.
No big bets there though. It's like Britain's biggest bank, Britain's biggest ride-hailing, sort of app. Britain, the world's biggest retailers and the world's biggest sort of growth businesses, just to prove, some, as far as the stock market are concerned, have done nothing, but you haven't lost anything anywhere in a world where apparently the whole financial world's falling down. You've done worst, lost 1.3, and best plus 150.
Yeah.
You know, they're not sort of lunacy like, oh, I invested in this guy in his shed who was making flux capacitors.
Like, no, but the thing is, you will get people out there that do it because they're looking for the quick.
Absolutely.
Yeah. It's part of the learning. You know, you can do watch lists and markets and have a little play around with it. But you know, even if you look at commodities and things like that, is another area to really play around with. We spoke about the US dollar and stuff like that. You know, on the currencies and whatever. But I think since Andy started talking about crypto, a light is shining on his face. If you're watching,
it's a bit godly, isn't it? It's a bit odd.
If you're watching on YouTube, you will see that Andy started talking about crypto, and then the US maybe
It's just a torchlight in his face.
Torchlight. So be careful what you say next. So we're probably due to wrap that up. But the next episode, is it the next episode we're doing? We've got the crypto specialist on, or is there
Be a couple of weeks.
Couple of weeks.
Yeah.
Couple of weeks. Yeah.
Okay. Well, I look forward to that. And thanks everyone that's obviously joined us for this episode. If you're listening on audio, please hit follow, hit subscribe. If you're watching on YouTube, don't forget to hit that like button and share it around. You know, if you've got family, friends and colleagues that you think would benefit from listening to the show, we're always authentic with it. There's no agenda behind what we're doing. We're just having an educational kind of podcast where we give our opinions, and yeah, we'd love you to share it and drop something in the show notes if you see fit as well. We'll be back next week, chaps.